Good morning, everyone. It is 6 a.m. on Friday, August 23rd, about half an hour before the market opens, and everyone's waiting for Jackson Hole. And so, to not repeat myself and to actually look at things, because there are things to look at other than Jackson Hole, we'll go ahead and take a look at everything. But Jackson Hole is going to dominate today for sure. So let's take a look at everything and then we'll see what we can kind of glean going into the Jackson Hole announcement or report. So I guess it would be a conference. So the S&P, we can see it pulled back quite a bit yesterday, but in the context, all it meant was that we're chopping sideways. We can see in the pre-market, we're bouncing back up on doing about half of what we did yesterday. And that would make us perfectly where we started at the beginning of the week, or where we closed on Monday, I guess, rather than where we started at the beginning of the week. But anything that Powell says at Jackson Hole could send us higher or lower. So let's take a look at our futures first, and we'll see how everything looks. If we look at our futures, up quite a bit. Now, normally this would be definitely non-random, and even now in our heightened volatility environment, I would call this non-random. Let's take a look at VIX real fast. Yeah, at 16.87. So this is still we're not at super elevated levels. We are above that 15 level. So I would say these futures levels, they are non-random and obviously to the upside. So we are biased to the upside today. So that's a little bit of undoing some of the bearishness that we had yesterday. That was a pretty big move yesterday, given the context of everything that was going on in the market. So we're just undoing some of that while we go in to wait for what Powell says. And obviously this market thinks that it's more likely that Powell says something dovish, meaning that something that indicates that they're going to cut rates, rather than something that's not dovish or something. It wouldn't be hawkish, because hawkish would mean that he wants to raise it. But they baked into the market over here. Let's just see what our current numbers are, our current probabilities. Yeah, so it swung back. It swung back with that pullback in the markets. We swung back to the 25 basis point rate cut. I guess it wasn't pullback. It was a mean reversion, and not even. Let's see. Did we fully? I don't think we fully mean reverted. Yeah, we still have a little bit of distance between where we closed in the EMA 8, and obviously at the opening we have even more of a distance. So futures are indicating that the same thing that the Fed Watch is indicating, that we do have a bias towards Powell saying something like no decisions have been made yet, but if the data continues to look this way, then it would be appropriate for us to consider rate cuts. If he says something like that, then these percentages are, well, I guess we may shift more back over here. It's hard to say, because both of these indicate that he would cut, that he's leaning towards cutting rates. But so this exact mix may not change, or it's hard to predict how this might change, but the S&P would probably go higher, at least match all-time highs, if not poke above all-time highs. If he says the opposite, or if he just says what he's always been saying, which is no decision has been made yet, we don't make decisions ahead of time, we need to see the data. If the data continues to improve, we might consider. If he just keeps on saying that, then we will most likely start to move downwards, because at this point, the market really does expect that they are going to cut rates. It's 100%, right? The 100% probability is what they're expecting. So if by now he doesn't say that, yeah, there's a chance that we're going to cut. If he keeps on saying, oh, maybe not, we'll have to see, then that's going to disappoint a lot of people, or at least shake the confidence of some people, and this will start to move downwards, and we will probably see at least some percentage go back into a 0 basis point cut over here. So a lot is going to depend on that, but independent of that, remember, this is going to have an impact for a few days. And then something like the Fed policy will probably have a longer effect, because that does affect policy that influences the market for a while, at least for a couple of months. So we will probably have a more pronounced effect or a more extended over time effect, rather than just a few days. But the bulk of the move will be in the first few days after the Jackson Hole announcement. So independent of the Jackson Hole announcement, we still want to see. So just say he says something that the market likes and we go up and we make an all-time high. What we want to know is, will that rally continue and extend, or for how long does it have potential to keep on extending? And for that, we can still look at the deeper market dynamics. So let's look at our sectors, and we'll look at TLT. Will be hard to see because that's going to be very clouded by Jackson Hole. So I want to see what's going on globally. So let's look at that first. FXI, Chinese stocks bounced off of this trend line that we drew, started chopping sideways. And if we hit that trend line again, then the more likely direction is to move downwards, which would then break the MA50, the EMA 8, and maybe even the EMA 20. And that would be bearish for China. It's bearish for China, is probably bearish for the United States as well. The other thing that we want to remember is that there are still a couple of wars going on in the world, and oil is starting to bounce off of this level. So you see how in roughly the area of this line, we had a lot of price action over here. So if we start to bounce upwards, that may be an indication, maybe, not yet, maybe an indication that there is going to be increased concern in any of the war zones that we have right now. The major ones are Ukraine and the Middle East, Israel, Palestine. So any worsening of those conflicts could start to send this higher, and that would be an indication of instability. Markets don't like uncertainty or instability, world instability, because it does interfere with commerce. We had a lot of news of interference. That hasn't been in the news lately, but I imagine that's still going on, of shipping through the Middle East, which is a pretty major shipping lane. So if conflict increases over there, then we will have more uncertainty in the markets. Crude oil most likely move upwards, and then that would be downward pressure on the US stock market. The other thing that could happen that I've been thinking about lately is the Ukraine war. The last I heard, the Ukraine war hasn't really been in focus, but I think that is a mistake on the market's part, or influenced by the news. I don't know why they're not reporting, but the last thing I remember hearing, I don't know about you guys, the last thing I remember hearing was Ukraine invaded Russia. You guys hear that a couple of weeks ago? Ukraine invaded. Yeah, so what we hear is that Ukraine made significant gains in a counter-offensive and invaded parts of Ukraine, and they invaded an area that was right next to a nuclear power plant. And the idea is if they could occupy that nuclear power plant, then that would force the Russians to back off, because they don't want a Chernobyl event. And then the Ukraine would be occupying a piece of Russia, and that gives them negotiating power to end the war. Well, what happened was, let me see. Let's do Ukraine invades power plant, nuclear. So Kursk, It was Kursk. And so they tried to invade Kursk. I don't know. I guess some reports are saying that it was already part of Ukraine and not part of Russia. I don't know. But in any case, Ukraine failed to take over the Kursk power plant. And that means that those Ukrainian soldiers who were sent over there are now stuck in Russia. And Russia has now surrounded them. And so now those Ukrainian soldiers cannot retreat back into Ukraine. And that is not good. That is not good news. What we have to remember is that initially Russia thought they were going to win this war very, very quickly. But when it became obvious that they weren't going to, then they started to play the long game. And they've been playing the long game for 2 years. Russia is excellent at playing the long game and weathering down their enemies. So they're just chipping away at these soldiers that were sent over into Kursk. I think there were about 6,000 of them. And the news isn't reporting on this, but at some point, the Russians are very likely to either capture or kill all those Ukrainian soldiers. And that does leave a lot of soldiers left for Ukraine. Actually, it doesn't leave them now. In order to defend Ukraine, there's not a whole lot of soldiers left because they did send a significant force into Ukraine. So if that happens, and if we start hearing about it in the news, or where Russia just killed or captured all those Ukrainian forces, that's going to be very negative news for the markets, and it would actually indicate that Russia is very, very, very close to winning that war. So either there's going to be escalation where other nations actually start sending in soldiers because we ran out of Ukrainian soldiers, or Russia wins the war. And either way, that's not going to be interpreted very well by the stock market. And so there are some risks right now of a breakdown. So we a couple weeks ago, we had concerns about recession. We had the Japanese carry trade, which I think is not over yet. That shoe could still drop. So there's so many things here to be more pessimistic about the market in the midterm than there are to be optimistic about it. So we just want to be cautious in this environment. What we're basically saying is that there's a lot of risk factors here and a lot of questions and a lot of unknowns. And that makes the markets jittery, but the markets obviously aren't thinking about that yet. So if we can front run them, if we can see these things before the markets, then we can start to prepare. And that doesn't mean we take action yet. That doesn't mean I'm going to short the S&P. That just means that I'm going to prepare and maybe think about always having a hedge in place or being ready to have an hedge in place, at least having a plan, at least knowing that, hey, if I'm going to hedge, I'm going to buy this. I know exactly what I'm going to buy right away. When I sit here and go and look for what am I going to do in order to hedge, it's going to be always part of my process going forward for the next few months until either something happens or it becomes clear that, hey, markets are not concerned about this whatsoever, and they are resuming, like commerce is resuming, business is doing well, earnings are good, our tech starts to lead again, small cap starts to lead again, the ARK fund starts. That's another thing we should look at. So QQQ is definitely not leading the S&P at the moment. We are at a very important decision point at the MA50 here, although we did bounce a little, or it does look like we're going to bounce a little at the open over here. IWM, same thing. What's interesting is this was the all-time high over here in 2021 after the COVID scare, but we're not that far away, not super far away from the all-time high, and we are not too far away from this 2000 to 2021 bulk of the region right here. We actually touched it back here in July, and we're sort of heading our way back over here. And let's take a look at how ARK is. Okay, ARK is nowhere near the all-time high. We're at 45. all-time high was up here at 157, 159, and the bulk of 2021 was at around 120. So we're not even close. So speculation is not inside of this market. We are looking more for steady and assured gains. Money is not going into speculative sectors. If I look at my sectors right now, okay, if I look on the average basis, SMH is at top, but home builders and gold, so gold mostly would definitely not indicating speculation. Utilities, not speculation. Defense, not speculation. So all of these near the top, with the exception of SMH and maybe home builders, are not speculative. Let's take a look at 3 months. Real estate, biotech, healthcare, defense, and then we get SMH. If I look at 1 month, utilities, defense, consumer staples, healthcare, not even close to being speculative. So in the recent months, we are backing away from risky sectors, and that is not good news. That does not make for a healthy movement above all-time highs that's going to be sustainable. So I'm going to be preparing for another pullback or a correction that could develop into a full-on bearish market. So it's a little too early to call that, but all the forces that I'm seeing are starting to build up and say, hey, in this medium to long term, we just got to be very careful over here. I don't trade medium to long term for the most part. I mostly trade short term. So I'm not going to position myself yet. But if I was a long-term trader, I'd definitely be going into defensive sectors. I wouldn't be going into tech. I wouldn't be going into SMH. I wouldn't be going into anything speculative, including say Bitcoin. Bitcoin at this point is still a speculative asset. There's a lot of talk about it being digital gold, but we can see that during this period when we had fear, July 9th down to August 2nd, July 9th, okay, down to August 2nd, okay, that was down. So it's not acting like digital gold. It's still acting like a speculative, like a S&P 500 stock. So in the short term, we still play exactly what's in front of us, which is, hey, Jackson Hole, that's either going to send us up or down. And then that would just be a short-term move, maybe 1 to 2 weeks of influence, maybe 3. And then we get the actual September 18th rate decision. Then we'll have another couple of weeks. And then we go into election cycle, which means that we probably don't want to make a lot of speculative decisions that an institution would not want to. So they would wait until the election, unless they're predicting it's like landslide. We know exactly which candidate is going to win. We have a very strong confidence that there's a stronger candidate that has a high chance of winning. Then the market could be speculative again. But as long as it's uncertain and hey, it's neck and neck or it's pretty even, then this market will just start chopping from after the rate cut decision. It'll start chopping into the election. And then we'll have a decision up or down unless some of the global events that we talked about start to exert influence and start to take over the focus of what is impacting the markets. So from my viewpoint, it's time to start to add a layer of caution into everything that we do, even if in the short term it looks very good. We get, hey, Jackson Hole, great. And then we actually get a rate cut in September, great. What if we get 50 basis point rate cut in September? Great. Well, what if we know exactly which person is going to be elected? Great. That doesn't erase any of the risks that I outlined earlier. So even if that all those things happen and we get sent to new all-time highs with the S&P 500 goes to 600, 620, that that would be a point where I would say, oh, uh-oh, now we've reached a significantly higher, all-time high. That could be a time where we start pulling back, or recession comes back into focus, or we find out, oops, we cut rates too early and inflation is still happening, or any of the things that are happening with the conflicts around the world, or China continues to do poorly and starts their economy just goes into the crapper. Now, any of those things could start pulling us back significantly lower. So for today, we're just going to focus on that Jackson Hole. We're not going to do anything in the first half hour unless it's to hedge ourselves or get into a tail risk position or to close some positions, take risk off the table. And then as Powell speaks after Jackson Hole, we'll see how the market reacts. We'll see how VIX reacts. We'll see how bonds react. And we'll see how the individual sectors react. And that will give us a clue as to what the next couple of weeks will look like. So let's just get ready for some volatility because the one thing that I can almost absolutely guarantee is that it's going to become volatile once he starts speaking. So we'll leave it there. There's no post-market analysis because we wrap that into the weekly market analysis. So I will not see you until Monday morning. Have a wonderful weekend and just put on your seatbelts because it's probably going to be a pretty wild ride. Bye, guys. I'll see you later.